probably will be in triple digits very, very shortly. I want to bring in Ashley Webster, Liz McDonald, Todd Horwitz, and Mike Murphy, along with John Hoffmeister. First, guys, RBS raising a big red flag, telling clients to sell everything. Mike, you agree with that?
Absolutely not. I mean, this call's way off base. I mean, you look at what he says. It's not Goldilocks anymore. Sell everything. My question, you sit on cash. And here's the thing, Charles. You've been doing this long enough. When do you go back in? When does the all clear bell ring? There's a lot of opportunity in this market. You've had NASDAQ down 8 days. There are places to be allocating money right now. Do not sell everything you have because of a bad week and a half.
I would tell people to first look at RBS's stock chart. I don't mean to diss the guy, Todd, but come on, give me a break. What do you think?
Listen, Charles, I'm a bear and I'm a big seller and I'm looking to sell the S&P. But as far as liquidating my portfolio, I'm not liquidating into this market. That's one of the most ridiculous calls I've ever heard. Sell everything and run for the hills. I mean, even myself as a bear right now would never liquidate here. You want to look for good opportunities to find, because there are opportunities on either side of the market. Work your portfolio, learn how to hedge it, and be in a good position. Then you don't have to worry about liquidating out here. That's just a ridiculous call.
Yeah, but you know what? If we go down another 2,000 points, you may get a good book deal out of it. All right, guys, let's switch to oil for a moment. Of course, that's causing most of the market jitters recently. We've seen it all over the place. In fact, it was under 30 for a moment. There's a report out now that says 1/3 of U.S. oil companies could face bankruptcy. Todd, what are your thoughts on that?
Well, I think there's a high risk.
Actually, probably.
Go Todd, and then I'll go to John.
Todd. Yeah. Okay. I think that oil is probably coming somewhere near a bottom. You know, if you look out in the future, Charles, and go out to a year from now, oil's priced at about 20% higher than it is now. I think we're seeing some capitulation down here at the bottom. Rig counts are at one-year lows. They keep knocking them down. We're seeing all kinds of reasons that we should go lower, but I think there's going to be a decoupling from the market, and you're going to start to see oil hold or start to rise, because we weren't coupled last year when everybody wanted that lower oil was positive for the market. So that's what I see.
John, half to two-thirds. We know there's going to be a lot of smaller names out of business. How bad is the carnage going to be, John?
Well, I don't think it's going to be disorderly or chaotic. I think there are a number of companies that are going to struggle. They probably that would file, but whether it's Chapter 11 or Chapter 7, don't know for sure. I'd say it's probably more Chapter 11. This industry is tenacious. We don't give up in the oil and gas industry. We've been through bad times before. We'll see our way out the other side of this one. Yeah. You never know when the geopolitical situation changes. You never know when the independents start shutting in all their stripper wells. You never know when, suddenly, instead of surplus, we've got shortage. And so a lot of people are going to hang in there.
But, I'll tell you something.
Tough.
Great point.
More Wall Street shops are calling for $20 oil. Now we've got at least half a dozen, and now we have Standard Chartered saying $10 for oil.
And can I go back to John? John, very quickly, interesting article in the Journal to Charles's point. It says that North American oil and gas producers at current prices are losing about $2 billion a week. BP just announced it's laying off 4,000 people within the next year, 400 today from the North Sea oil field. It's already being felt, and if oil continues to move lower and for the long haul, this is just going to get worse, isn't it?
Yes, it's going to get worse, but it's not going to be the kind of disorderly. This is cost cutting. This industry has been through cost cutting for decades. It knows how to do it, pushing out future projects.
Yeah.
But everybody has to be prepared for the snapback, which is just as likely as lower prices.
John, I agree with you. I think if we go to 20 or 10, it will be very short-lived, and we will come roaring back. There's the point where everyone stops losing money because they can't afford to. Let's check the shares of Apple. Broke under 100. That was a key support point. Now we're tickling it on the upside. Liz, sitting right around $100.
Yeah, a growing number of Wall Street shops saying it's a buy right now, including Piper Jaffray. They have been bullish for some time. What are they saying? And Mizuho Securities put out a bullish call. They're saying investors are too caught up in the short-term negatives, that basically Apple is trading just as it did when it was iPhone 5S mid-cycle in 2014, and the price-to-earnings ratio is floating around where it was then. Apple gets about 10% of its revenues from services. Apple's going to migrate more towards services like the Apple iCar. Right. So watch for that. They're saying that this stock could bump up.
And it's real interesting to look at Bank of America's note this morning. They upgrade the stock to a $130 price target. That's not even at the high level it hit a few months ago.
Yeah.
But from these levels, it's a 30% move to the upside.
Piper Jaffray's looking for 176 or something like that. Huge. All right, let's take a look look at Twitter, still near its all-time low. Ashley, listen, I think this is more of a management issue than anything else.
It is. Look, the problem with Twitter right now, stagnant membership. The users are just sticking where they are. They hope that the Periscope, this is a live video streaming company they bought last March, will help to reinvigorate the user base of Twitter. It will basically allow live streaming video service to integrate with Twitter. Is that the answer? Do they go to 10,000 characters, which they just are considering right now?
They're worried it's going to clutter up the news feed, though, with Vine videos and 10,000 character
Hey, as long as you get those eyeballs and somehow
That's
way to
true.
buy them. Are you looking to buy it yet?
I'm not looking to buy Twitter yet, but I use Twitter. You know, and I think everybody's using it. They just need to figure out how to monetize this better. But I think with Jack in place as the CEO, I think they're going to figure it out. And if not, someone comes in and buys
I own a little bit of Twitter myself. By the way, let's take a look at Lululemon after the bell yesterday. Reported strong holiday numbers. Want to go down to Nicole. Nicole, what's going on now?
Look at the stock. It's up over 9% today. Of course, it's been under pressure over the last 52 weeks. Recently, prior to the December month, they actually trimmed their forecast. And now, after a great holiday sales, they are now raising their forecast for the fourth quarter. So this really wows Wall Street. The stock soars, despite the fact that they have intense competition from Nike and Under Armour and even Old Navy. They still are pushing those $100 pants, and they have a whole new sensation line. The relaxed sensation, held-in sensation, tight sensation, naked sensation, etc.
All right. Express also had good positive comments, and Burlington Coat Factory up real nice this morning as well. So getting a little bit on retail. Want to take a look now, though, at the Russell in bear territory. Todd, what do you make of it? The small caps had a hell of a run. Now they're getting pummeled.
I think they're going to continue to get pummeled. Listen, there's going to be a rally, Charles. We're not going straight down. I look for a pretty substantial rally here, probably 3-4%. And then you want to sell them again. That really is the true representation of America, because those are all small cap and mostly American companies that are building here. I think that it's going to be much lower. That's always been the sign that I like to watch. That's my real trigger, is watching that when it hit from $12.95 all the way down to $10.40. I think we see maybe $1,100 and you want to sell them again. I think we're going much lower. I think we're going to go test at least in the S&P, the August 24 low, but I think we're going lower than that.
Worrying recession signal from Bank of America. U.S. rail cargo at its lowest level in 6 years. So that usually presages a recession.
Well, the transpos actually were the harbinger for all of this. The transpos went negative while the market was rallying last year. A lot of people said, you followed Dow theory, that was your first red flag. Small caps aren't leadership, but can they come back?
They're not leadership. They can come back, and they will come back. But I'm going to kind of agree with Todd here in that if you have a very volatile market right now, you want to go out and look at the large caps, even the mega caps, because they've been outperforming here versus the small cap names. So
I think money will go into the large cap names before the small cap names. One small cap name, no money's gone into is Fitbit. Rough start to the year. You had a couple of upgrades on the stock. Nevertheless, it's been getting hammered and hammered and hammered. On the other end of that, of course, Starbucks now saying they're looking to open 500 stores every single year for the next 5 years. Ashley, what do you think on this? What are the other details you have on this?
Well, Starbucks, yes. Listen, the expansion in China, maybe. It's going to be a tough, long road, as it is for every other American company trying to make it in China, regulation and what have you.
Netflix isn't in there, neither is Facebook.
That's exactly right.
Money, though. Here's the thing, though. This is why I think overnight we saw in China 21 million cars were sold there last year, up 18%. We saw a Chinese company buy an American film company for $3.5 billion in cash. We heard the Chinese government say, listen, if you go after the yuan, we're going to beat you. You know what? Maybe China isn't dead as we say it is.
Well, 100% China's not dead. So, reading Charles Schultz, the CEO of Starbucks, hearing his comments, I hear Todd wanting to get in. Todd, China is not dead, no matter how you want to look at it. And Charles brings up some great points about auto sales over in China. So it's a slowing economy, yes, but it's still an economy that has a lot of upside. And I think Starbucks is going to be at the forefront there, 500 stores.
Let Todd get in there real quick. Todd?
We all have an upside, and I'm not saying China's going broke. But right now, the Chinese government owns 52% of the equity market, and they are opening up the window to buy more. They have dropped the atomic financial bomb in which the government's going to support the market. We know that free markets have to eventually reign and true price discovery. We're not getting it now. Eventually, China will be fine, just like here. We're going to have a big sell-off, we're going to have a correction, and we're going to come back stronger than ever. I believe that in China, too. But for now, there's too much manipulation involved and too much non-real free markets, and that's the problem.
And of course, we know that Charles Schultz was the peanuts and Howard Schultz.
Right.
Howard Schultz.
But,
Thank you.
John, I'm being told to wrap, but I got to go to you last on this because China is sort of the epicenter of the world for growth. Will that be the place that helps bring oil back?
It'll help, but so will the rest of the world as demand for oil products continues to grow. There's still 9 million people in the U.S. work in U.S. oil and gas. That's just the beginning. Then you take the rest of the world. This industry may be being hit hard, but it's a long way from down.
Oh, absolutely. And, listen, I read a report from ExxonMobil a year ago. They say every ounce of oil they have in the ground will be sold and will be sold eventually at a profit. Thanks a lot, guys. Great stuff. Well, the stage is set.